All right. I believe we are now officially broadcasting. Well, welcome, welcome, one and all. You are here for the lease purchase and lease option strategies for investors in U.S. single-family rentals webinar. If you are here for that, you're in the right place. If you're not, then you are not in the right place. I will ask in a minute or two for you to for us to do a mic check, which means if you can do me a favor and in the chat box, just tell us that you can hear me okay, that my sound quality is good, and that everything is fine there. And if you also want to tell us where, either in the U.S. or internationally you are, that'd be great too, just so that we can see us, get a sense for who's out there. I will, before I introduce myself, I will reiterate what this is and what this is not. This is not a sales pitch. This is not an attempt for you to get you to buy a product or service. It's really just an explanation of a concept, and we'll talk in a bit more about what that concept is and all the issues around it. But I do want to assure you that this is not going to be a hard sell of any sort. Only one basic ground rule, and that is, as you have questions, and I expect that you will have questions, we ask that you hold the questions until the Q&A section. We'll have plenty of time to answer all the questions that you've got. So if you do have any questions, please make a note of them and then bring them back to us, preferably in the Q&A capability for Zoom or in the chat box. All right, so let me introduce myself. My name is Mitch Messer. I am Senior Asset Manager with Home Pride Properties International. I am a real estate investor. I've been operating here in Metro Atlanta since 1999, and I have been doing lease options since then, and I have the scars to prove it. Joining me on the call is my co-host, the brilliant Marta Brown. Marta Brown is the principal broker with Blue Peach Realty and the preferred and favored property manager and real estate broker for Home Pride Properties. Marta, how are you doing?
I'm great, Mitch. Thanks so much for having me on the call. Looking forward to speaking with all of the attendees and getting their questions and having them to learn about the lease purchase and lease option strategies.
Awesome, awesome. In addition to doing lease purchase yourself, Marta, and as a landlord, I know that you are a property manager for lease purchases.
That is correct. That is correct. My husband and I have properties where we lease purchase them to tenants, and I also manage lease purchase tenants for other investors.
Awesome, awesome. So that's who we are. We will we'll start talking about the premise behind lease purchase and lease option, but I really wanted to spend a little bit of time just describing, I guess I should be advancing the slides. Huh? Let's do that. So that's us. That's our smiling faces for those of you who haven't met us in person. Those aren't stunt doubles. Those are actually us. That's what we look like. In my case, that's what I look like on a good day. What's all the fuss about lease purchase? Why do you care? Why should you care? Why should you care now if you didn't care before? It occurred to me, first I should say that if you're on this call, if you were invited to be on this call, it's likely because you are an active either local to Georgia, out of state, or international investor that we've invited to talk about a variety of topics. This is actually the third in a series of webinars that Marta and I have done together. But we know that we do have a lot of folks out there who are in countries where the concept of lease purchase may not be as common. And so it may not be clear why, first of all, what that is in the first place, and then second of all, why that might be of benefit to an investor. So let's talk a little bit about why lease purchase is an important concept to understand and where it fits into the real estate cycle. So we all know that real estate, like everything else in business, works in cycles. There's boom, there's bust, there's growth and expansion, and then there's collapse and lack thereof. And in fine print, I'll say, see 2007, 8, 9, 10, and 11 for an example of collapse, but at least in the U.S. We know that things right now in 2019, this is April 17th, 2019, are very, very different than they were in 2007, 2008. Now, we can all agree that the worst of the crisis is over. Houses have bounced back in terms of prices. The economy is chugging along quite nicely. And while the big action was in fix and flip, buying a property for pennies on the dollar, fixing it and flipping it, now everybody wants to be a landlord. Everybody is desperately seeking cash flow properties here in the U.S. and in Atlanta in particular. So now that everybody is cued in on landlording, I believe lease purchase is an even more important concept to understand, because I believe it gives those who get it a competitive advantage. In addition to lots of large and small investors landlording, offering properties for rent, you've got the big guys, the Invitation Homes and such, who have been buying up thousands of homes and making them available for rent. And that's what you're now competing against. That's what you're now side by side with your properties. You've got an Invitation Homes property, for example, and you want to get a quality tenant, and they do, but they've got a marketing budget that dwarfs yours. So the question is, how do you operate in a market where everybody is renting? And I'll pause here just to say, Marta, did you want to throw anything in here before I go into the drivers? Nope. Okay. Well, then I will assume that we're good. So,
sorry, Mitch, I was muted. Sorry about that.
No worries. No worries.
What I was going to say is that yes, things have evolved, especially with people moving towards lease to purchases, or the whole concept of cash flow and improving cash flow. So it makes sense that at this point in the cycle of real estate investing, that investors are moving more towards that, or to increase their cash flow. If they've got renters now, they want to do better. They want to, you get to a point where you can't charge, but it's so much more rent, and so this is the next in the evolution. If for some investors, that would be true.
Exactly right. Exactly right. And so there are, right now, I believe, three main drivers that make lease purchase particularly relevant right now where we are in the real estate cycle. The first is increasing rents. Rents in Metro Atlanta have come a long way in the last 15 years, and they are now at a point where if you're a landlord, it's nirvana. Rents have gone up. They're probably going up a good 5 or 10% a year, but they're going up quite aggressively, which is great for landlords, not so much for tenants. The second prong of this three-pronged fork, I guess, is increasing in property values. So if you are a tenant and you would like at some point to own a house, let's just say, you've got the one challenge that I just mentioned, that your rent keeps going up every year. So more and more of your money is going towards rent. That means you have less and less money to save towards purchasing a house, towards a down payment or towards purchasing a house. The other challenge is that the house value is not a stationary target. It's moving up every year. And so I think right now the average appreciation in Metro Atlanta is like 5-6%. Marna, is that about right? Somewhere in there?
That's about right. Yes.
So that $100,000 house that you were trying to get last year is going to cost $105,000, $106,000 next year, and it's going to start. And unfortunately, as many people may not know, U.S. wages are not doing 5% a year. They're not keeping pace anywhere close to that. So you're falling further and further behind with trying to buy a house. And then the third prong is interest rates. Mortgage rates are going up. Now, they've been bouncing around a little bit, but I think we can all appreciate that in the long run, they are right now at the lowest point that they've been in like decades. And that's not going to last forever. It can't last forever. Eventually, the Fed has to start raising rates, and that's going to impact mortgage rates, which means it's going to be even harder for people to qualify for a mortgage because rates are going to go up. So those three things make it, if you're a tenant, make it a challenging environment because you feel like you're throwing your money away by renting, but by the same token, you can't seem to ever get a break, to catch a break, to be able to buy a house because the prices keep going up and interest rates keep going up. So if you are thinking about trying to get out of this trap, you don't know what to do. Well, to the rescue is lease purchase, and we'll talk in a bit. We'll define those terms, but I just wanted to make a quick side note because I get a lot of this. I talk to a lot of investors out of state and international, and the desire for multifamily housing is strong, and it probably should be. Certainly, it's a great class of real estate, but I believe that a lot of the analysis that people do is to compare multifamily residential to straight rental single-family houses, and on that metric, multifamily certainly beats the heck out of straight rental single-family houses. However, if you compare multifamily to lease purchase single-family houses, I think it's a whole different ballgame. I think the numbers are far less in favor of multifamily. In fact, I would say in most cases, you've got to do the math, but in most cases, you're going to do far better with a lease purchase of a single-family house than you would with a multifamily, or at least it'll give multifamily a run for its money. And that's just two quick points on that. One is obvious, I guess, but I'll say it. You cannot lease purchase a quarter of a quadruplex. You can't lease purchase half a duplex. It's an all or nothing kind of thing. So if you have a multifamily home, lease purchase is not a strategy that's available to you. And that's, in my opinion, a big knock against multifamily.
Let me interject something too, Mitch, here. That let's face it, this is a tough market. This is definitely a seller's market. If you want to buy a multifamily, a small multifamily, a duplex, triplex, or a quad, there are not as many around. They're not as available either. So that's something you have to take into consideration. Granted, that may be your preference, but there are not as many around. And when they come up, let's face it, the seller wants the best price generally, or it's going to have extensive repairs potentially. So sorry, I didn't mean to interrupt.
No, that's a great point. That's a great point. So our suggestion is not that you not consider multifamily, but that when you do your multifamily analysis, compare it not only just to straight rental, but also to a lease purchase example, and then see if the numbers are still as favorable as you'd like. Because with my single family house, I could choose to sell it, or I can choose to lease purchase it, or I can choose to rent it. I don't have the option of lease purchasing a multifamily. So having said that, let's dive right into the terms, because I think this is where a lot of folks get tripped up in talking about lease purchase. In the very headline for this, the title for this webinar, we use both lease purchase and lease option, and I did that because I knew that some people would be familiar with one term and not the other, so I wanted to include them both. But let's define all three of the big three terms that come up here. What I'm calling a lease purchase is an arrangement between landlord and tenant that says, I'm going to lease you the property for some period of time where you'll be a tenant, and I'm also going to, at the same time, have an understanding with you that you're going to purchase this house at some future date for some set price with a fixed amount of earnest money involved. And therefore, if all goes well, you're going to be able to buy this house at some point down the road. That's what I call a lease purchase. And it's defined by both the goal, the outcome that we want, but also by the specific documents that are being used. There's a lease and there's a purchase agreement. That's what I call a lease purchase. The distinction is a technical one, but it's important to make the distinction. It's about the paperwork. Lease option is the intent is exactly the same. I've got a tenant, I'm a landlord, I've got a tenant that wants to own at some point down the road, isn't in a position to qualify right now for a mortgage to buy it, but they do have an intention to buy it down the road. And I achieve the same goal as a lease purchase, but I use different instrument. I use a lease agreement, but I use something called an option. And that's what I had been using for the 20 years that I've been doing this. I no longer recommend using that. I recommend doing what MARTA does, which is lease purchase, because it's cleaner, it's neater, and it's way better. So for the purposes of this webinar, beyond the next few minutes, we're not going to use the term lease option at all, because everything a lease option can do, a lease purchase can do better. And it's safer and it's cleaner. So, but if someone says the word lease option, that means there better be a lease agreement involved and an option agreement involved, and that's the distinction. But the intent is the same as it is for a lease purchase. And now let's go to my least favorite term, which is rent to own. And I know that I was speaking to a Canadian investor a few days ago, and I was describing lease purchase, and he said, "Oh, well, we call that rent to own." And I know that a lot of folks have used the term rent to own. I do not like that term. And here's why I don't like it. The intent is, for the most part, the same as the other two. You've got a tenant that is renting and they at some point want to own the property. The reason why I don't like rent to own is because it does not distinguish the type of paperwork that's being used. And so I've seen rent to own be confused with owner finance. The tenant goes in and says, "Hey, rent to own means I'm going to pay you rent, and then at some point down the road, I'm going to own the property." Well, that's not lease purchase or lease option. That sounds more like owner financing. And because we're not talking about specific types of documents, there's opportunity for confusion, and confusion is the birthplace of lawsuits. And as a landlord, you don't want any part of that. You want absolute specificity. So rather than say rent to own, if you really mean owner finance, then say owner finance. If you really mean lease purchase, then say lease purchase. But rent to own doesn't specify how you're going to get it done, what the documents are that you're using. And so that vagueness is where problems start, particularly in the minds of the tenants who often hear what they want to hear. And so I would beg you not to use that term, to be more specific, and in fact use the term lease option if you mean lease option, or preferably lease purchase if you're going to do lease purchase. Marta, any comments on that one?
Yes. You have a slide on this, don't you, Mitch?
Oh,
you know what?
I'm so busy talking. Thank you. I'm so busy yakking away. I'm forgetting the whole exciting part of this. Yeah.
No problem.
I gotta do that.
Yes. The only thing I want to, there you go. The only thing that I would like to add is that if you're on the internet trying to find definitions for lease to purchase, lease option, and rent to own, you're going to have a wide variety of what that means depending on who the source of the information is from. Wikipedia says that that lease purchase is at the heart of rent to own, where what we're doing today is giving you our definitions, and our definitions reflect exactly what we have actually practiced. Not a concept, not something that's on a piece of paper, but this is what we physically do. On a lease to purchase, again, that's the preference that we use with Blue Peach, and also my husband and I for our personal properties, because it is cleaner, as Mitch said, and it's easy to understand. You're going to lease for this period, and then you're going to be the owner for this period. You have no ownership rights here, but over here, you get all of the ownership rights. They understand earnest money deposit as well. Option money sometimes can get a little hazy unless it's a more sophisticated buyer, a more sophisticated tenant, and not everybody understands that. So that's, I just wanted to throw that out there, that you're going to see different definitions, but these are what we use, and we have practiced these. So go ahead, Mitch.
Yeah, no, that's a good point. And I think, so when someone says to me, do you do rent to own? My next question to them is, what do you mean by that? Do you mean, and I'll let them tell me, do they mean, I'm going to pay you some money now, and then I'm going to pay you some money each month, and then at some point down the road, I now own the property? Well, that sounds to me a whole lot like owner financing. If that's what you want, then we can talk about that. But it's way too all-inclusive to use the phrase rent to own. So my recommendation is don't do it for your own protection as a landlord. But for the purposes of this, we're going to talk exclusively about the lease purchase arrangement, which is the cleanest. So I know that most of the folks in fact, probably all the folks on this call are investors that are hard-nosed business people who want to see the numbers. And at the end of the day, if the strategy is better than what they've got, they're going to consider it, but they need to be shown how that actually works out. So I'm going to throw up a slide here that's going to do a head-to-head comparison, rental versus sale versus lease purchase. And I unfortunately could not set this up as a build, so it's going to all hit the screen at once. And I beg you not to go too far ahead because I might lose you. So I'm at the risk of losing you. I'm going to throw it up there and we're going to walk through it. So I took a sample property that an investor could acquire all in for $130,000, which in Atlanta is very, very doable. Nice 3-bedroom, 2-bathroom house. Let's assume fair market rent is about $1,700. Let's also assume that the expenses, the annual expenses for the property, are about 1/3 of the income, which is also fairly reasonable. So let's look at this salmon-colored column, if you will, because that's the rental model, where I ask $1,700, I get $1,700 in security deposit. I'm not trying to sell it, so sales price and discounts and such are irrelevant. But over the course of a year, I'm collecting in gross rents $20,400, and assuming 33% expenses, that's a cash-on-cash return of about 10.36%, which is a respectable return. Anybody that's looking at deals in Atlanta would jump on a deal like that in a heartbeat. So let's leave that column and go to the yellow column. If you were to take that exact same property and turn around and sell it, so you bought it last week and you sell it next week, obviously you're making no rent, but you are going to sell it for full fair market value, which we're assuming is $150,000. So you're going to net $20,000 minus whatever you're going to have to pay in fees, like sales price discounts. Retail buyers in this market, because house prices are competitive, you're going to get people who are going to want to, in many cases, want to negotiate the asking price. So we factor in some amount for discounting off the price. You're going to have to pay commission on the buy side and the sell side, which works out to be, in our market, it's about 6% all included. So that's $9,000. So when you take that $20,000 in gross profits and subtract the sale price discount and the commission paid, you're netting $6,500, which is not horrible for a week's worth of work, but it's not nearly as good as it could be, because now shifting over to the blue column, in a lease purchase world, first of all, please do note that you can command a slightly higher rent just because you're giving people the opportunity to buy. I was conservative here and I said $50. Probably could have gone a little bit higher, but I didn't want to scare anybody off. Well, let's just say you get an extra $50 as a result of doing the lease purchase, which means you collect that in rent and your security deposit will be first month's rent, so you're going to get that. My favorite part of lease purchase is that you're going to collect at the signing a non-refundable earnest money deposit, which they're paying toward the purchase of the house. And we'll talk more about that later, but let's just establish that you're going to get that at the time of the signing of the lease. Same price, same basis. However, I shouldn't say same price, same value. However, because the understanding here is that the contract that they're going to sign to purchase is for, let's say, 12 months out. So the understanding is that the price is going to be fixed for 12 months. We're going to future price this house. If it's worth $150,000 now, we're not going to price it at $150,000 because, as we said, a year from now, it'll be worth more because houses are appreciating. So maybe you cut your buyer some slack and don't expose them to the full brunt of what the increase would be. Let's just say it's only going to be $7,500. I think that works out to be like 5% of an increase. So not bad there. There will be no discount because you're negotiating the price with that tenant buyer at the time of the signing of the purchase agreement. So there will be no after the fact negotiating. That's the price that you set. That's the price that you'll get. So that sales price discount goes to zero. And the commission, you'll pay commission on your sell side as you should, because if you have your property represented by an agent for you, but that buyer will have no agent. There'll be no agent commission that you're gonna have to pay on their behalf. So instead of having to pay the full 6%, you're only gonna have to pay 3%, which saves you a ton of money right then and there. So the total income in year one for this lease purchase is all the rent that you are going to get because you're renting the property for a year at a higher rate, by the way. Plus, you get to keep that $5,000 non-refundable earnest money no matter what happens, whether they buy or not. That's yours. So you get a $26,000 total income. And when you do actually get that sale, you get to keep $17,775 of that spread between the 157.5 and the 130, because you're not negotiating on price and you're paying half the commission. And oh, by the way, if you're paying U.S. taxes, which you're probably going to have to for investments here, you get to take advantage of capital gains, the capital gains rate, which is lower because you'll have held the property for over a year. So the bottom line number, and you can see it right there at the bottom line, is that your cash on cash return for lease purchase is 14.51%. And that's not counting the net profit from sale. That's just the total income increase. So while 10% is not bad, 14% is eye-poppingly good. And I think we can all agree that if this model goes toward plan, then that's a far better way of getting a decent return out of your property than just straight rental. And unless there's a downside that we're going to share with you, if there is a downside, then maybe I consider not doing this. But if there's no downside, then there'd be no reason to at least try going this route and see what happens. But this is the business case for lease purchase. If you hear nothing else that we say for the rest of this call, these numbers, if you're an investor, should be causing you to fall off your chair because there are a significant improvement over straight rent. And I dare say that most multifamily properties couldn't produce these kinds of numbers. So let me pause here, Marta, and ask if I've missed something or if there's something that could be said better.
Hey, you said it perfectly. It's a great comparison, and it really looks at, the pros and cons of each option. So yeah, you covered it all.
Cool. Now, I will throw out there that there are intangible benefits that I'm going to talk a little bit about. I'm going to defer, obviously, to Marta for a lot of these. But our experience has been that with lease purchase, because you're getting someone who upfront tells you that they want to own the house, you tend to get a better quality tenant. You tend to get a tenant who's going to take better care of the property because they see it as their own, or at least as being their own at some point in the future. So you don't have a lot of the issues that you have with a straight rental tenant. You also tend to have, when we've done lease purchases, which is why I love this strategy, you get calls that never end. You get so many people who want lease purchase. We started doing lease purchase in '99. We did it during the time when it was probably the worst time to do lease purchase, when money was easy and almost everybody could qualify for financing. And even in 2002, 3, 4, 5, we'd make a house available for lease purchase and it would fly off the shelf. And I wish I had 20 lease purchase properties now, because now's a good time to do it. But we could make money on this in bad times. I can only imagine how great it's going to be to do this in 2019. So your vacancy rates are lower. And because these lease purchase tenant buyers are attuned to the desires for home ownership, they want to be treated like owners, we try to pass off some of the minor repairs to them. So if your sink is leaking or starts leaking after the lease has started, well, hey, you're going to be an owner someday. Here's some practice opportunity for you. Go deal with that yourself. So you can pass some of the minor repairs on to your tenant buyer so that you don't have to deal with it. All the little tiny stuff that drives you crazy, the faucet's dripping, or there's the toilet's clogged, all that stuff that a tenant would be asking the landlord to deal with, you can pass that off to the lease purchase tenant buyer because they have asserted their desire to be a homeowner one day. Well, hey, this is what homeowners do. So this slide is, I think, it should be the carrot. Let's talk about the main reason, the motivation behind this webinar is I hear, and I know Marty hears, common objections to lease purchase, why people don't want to do lease purchase. So let's talk about those. And again, if some of these sound familiar to you and we don't address your questions fully, then please do come back around in the Q&A section and let's cover them. But the major myths around lease purchase, why people don't want to do it. The one is, I'll lose control of the sale. And Marta, I'm going to, again, start to defer to you on these. I'll jump in. But I did want you, because you probably hear a lot of this as well, to help me appreciate, help our listeners appreciate why losing control is the last thing that happens in the lease purchase, why you have actually all the control in a lease purchase.
Exactly. Sure. And that's the interesting thing about this myth is that when you sign up a tenant on a lease to purchase arrangement, they are physically signing a lease, but they are also signing a purchase agreement. And what we do is we move that closing date out for 1 year. So at the time the lease expires, the purchase agreement expires as well. So in terms of losing control of the sale, it's quite the opposite. You have complete control of the sale. You are the seller, and you now control the buyer. You control the price as well. You control the time frame. So I don't know how that myth got started, but the reality is, as an investor, you have total control with a lease to purchase.
Cool. And there's one scenario in which you don't have control, and I've seen this, and that is when, and I hate to pick on the do-it-yourselfers, but that's when someone does it themselves and they blend the lease agreement and the purchase agreement, or they make mention of one in the other. They muddy the waters with respect to the lease agreement. And now you've got, instead of a separate lease agreement and a separate purchase agreement, you've got some sort of hybrid thing that if you ever had to go to a judge and try to evict the tenant on, will confuse the judge, and they may say, well, we can't do a straight eviction because it looks like they have some interest in here, and there's this agreement, I don't understand it. And then it gets kicked up to a higher court, and now you have lots more time and energy and effort, and you get a fight to get, for example, a non-paying tenant out of your property. But the solution for that one, in my mind, and I'll say it, Marta, is easy, and that is get a professional to help you with your lease purchase who knows what they're doing and who has good paperwork, and can tell you that you will never, ever, ever want to blend the leasing and the purchasing. They're two completely separate agreements. They should not refer to each other by name at all, because that's what gets investors in trouble. So if you do it the right way, to your point, Marty, you will not lose control of the sale. The right way is to use an experienced property manager, I won't say who, an experienced property manager who knows how to do lease purchase, and then you will not lose control of the sale. Okay, let's move on to myth number 2 is somehow it's unethical. And I guess this one is, I'll start this one real fast because I hear this one and it's twin right next to each other, which doesn't make sense to me. And the premise here is that, well, if you know that the tenant can't buy, then offering to do a lease purchase with them isn't fair for them, because you're taking their money and you're not giving them an honest chance to get the house. And I'll say that, yes, if that's what your intent is, if your intent is to trick the tenant by taking their money without having the intention to sell them the house, then yes, that probably is unethical, but that's never what we're doing. We want them to buy because, as you saw from the previous slide, we make a ton of money when they do. And we want their non-refundable earnest money because that does wonderful things for our cash-on-cash return. So we want people who are legitimately excited about owning the property. There's nothing I love more than helping a tenant who wants to own. And I'll say that in the 20 years that I've done this, I have never had a situation where someone legitimately wanted to own a house and they couldn't own it because of us. There are lots of reasons why they can't own it, but all those reasons have to do with their credit or their financial situation or their circumstances. Never has it been the case that a tenant really, really wanted to own the property, put in all the work, and we, at the last minute, yanked the rug out from under them, because that makes no sense. We want them to buy. And I'll pause here and ask Marta if you want a piece of this unethical myth yourself.
No, I think you covered it. Certainly, if your intention is unethical, that's one thing. The other thing is you have to be careful with any kind of real estate transaction. It's got to be in writing. It is unethical, yes, if you tell a tenant, yeah, you could probably buy this property at the end of the lease period, but you never put it in writing. You have to be careful in that way. So yes, I would consider that unethical because you have not put your money where your money where your mouth is, or your paperwork where the mouth is. So you have to be careful in that way. But if you just look at the concept of lease purchase is not unethical, because if you've got all the right papers in place, there are no questions. And I have been, you mentioned going to court. I have been to court on a dispossessory for a lease to purchase tenant. And the court did, because the tenant brought up the lease and the purchase agreement, which are separate documents. And yes, it was pumped up from magistrate court to superior court. But in superior court, the judge completely understood it and they lost. So that was the end of that. But yes, you do have to be careful about having all of the right paperwork and having your ducks in order. So go ahead, Mitch.
So paperwork is the key, and your intent is also critical. Let's talk about the other one, which kind of is related. I'm not sure that it somehow scares away tenants who just want to rent. That if I market my house for a lease purchase, $5,000 in earnest money and $1,750, that I'll scare away the people who just want to pay the $1,700 and rent it. And in my experience, I'll just speak for me, for our 20 years of doing this business, we get so many calls from people who want to own the property. And many of them, or some of them, a good number of them, aren't qualified to own the property. So, but the draw for a lease purchase is stronger than it is for straight rental, because there are people out there who could live with the rental situation for the long haul. And if you made it possible for them to buy, they might consider it. But there are people out there who know for a fact that they do not want to rent. And those people will not even look at a rental ad, but they will definitely look at a lease purchase because that's what they want to own, and they just can't qualify right now. So if anything, having just a straight rental guarantees that you'll never see those people who might consider a lease purchase, because they're going to see rental. They're going to see that, they're going to look for the keywords that they want to see, namely lease purchase. And if they don't see that, they're not going to even bother approaching you about lease purchase. So I would argue that doing straight rental scares away the big money people who would happily pay you more rent and a non-refundable earnest money. But I have never had a situation where someone was afraid to call me about a house because it was offered for lease purchase. I've gotten people calling on lease purchase houses asking for Section 8. And so I believe that the quality tenants roll downhill. They start out at lease purchase, and then they may settle for lease. And if they can't do that, they'll consider looking at things like subsidized housing, Section 8. But if you mark it at the top, you get all of those folks. You don't scare away anybody. Am I missing something, Marta?
No. What I was going to say is if it scares away the tenants who just want to rent, that's okay, because you don't want them anyway if you're trying to lease purchase your house. You
True.
don't want a tenant who really prefers to rent, but they will accept a lease to purchase, because you're going to have problems, because they're going to think they are renting only. They're going to call you if the toilet gets clogged up. They're going to call you when the gutters get clogged up. So there's going to be things that a lease to purchase tenant will care for, but a renter will not. So that's okay. If it scares them away, then that's good. So that's all I want to say.
Good point. Let's talk about the next one. Tenants never buy the house anyway. Well, I guess there's two ways to look at that. One is, if that were true, but you did everything you could to make it possible for them to buy the house and they just chose not to, then that makes this no worse than a rental, except for the fact that you get to keep all that non-refundable earnest money for yourself. So if 4 were really true and people really believe that, then that would argue for doing as many lease purchases as you could, assuming that you created an environment that allowed them to buy. But if you gave them the opportunity to buy and they didn't take it, and they forfeited their earnest money, as they understood would be the case if they didn't buy it, then if you could do that, if you could do number 4 with a clear conscience, then that would be the best of all possible worlds. That's not a knock. That's a plus. But it's not true. Tenants do buy the house. We've had a number of tenants convert their arrangement that we're talking about here, lease purchase, and buy the house and are happy in the house and love it. And nothing is more satisfying to me as a landlord to have somebody who didn't think they could ever own a house be able to transition into home ownership because of our ability to make this available to them. So it's not true that they never buy, but if that were true, that would not be a negative. That would be a huge positive, because that means you get to keep all that earnest money and keep doing it over and over and over again with a clear conscience. Unless I'm missing something, Marta.
Let me just throw out no, those are very good points, Mitch. Let me just throw out, there are those that will not purchase, as Mitch mentioned. And sometimes that percentage is actually higher that do not purchase. But those that do, which, as Mitch said, is wonderful. It does happen. I know we personally have had it happen as well. And those that don't, then yes, they were not able to, for whatever their reasons were. Life changed for them in some way that was not positive. They have to move out, and then you do it again. So then you collect your earnest money deposit again, and then you put the house up for a lease to purchase arrangement again. So that's all I wanted to add, Mitch.
Cool. So that's not a knock, in my opinion. It's not true. I mean, certainly some will not buy, but that's, as long as you are not creating an environment where they can't buy, then they're adults. They made an adult decision, and it didn't work out, but that's not your fault. The other, let's see what else we got here. Don't I have to give the tenant the deed? Absolutely not. In fact, you're only going to give the tenant the deed when they actually get ready to close a year from now, when they're actually buying the house. In the meantime, the tenant is a tenant, and they have no ownership in the property. And I don't want to get too bogged down into the legalities, but the important thing is, no, you're not giving the tenant the deed. This is not an owner finance situation at all. This is purely a lease and a purchase. And I'll defer to you, Marta, on the document stuff.
Yes. No, you don't need to give the tenant the deed. It is a lease to purchase, which means when the tenant initially signs a lease agreement and a purchase agreement, they are a tenant. We make very clear that they have no ownership rights in the house today. At the point that they go and get a mortgage from a bank or a lender, some sort of lender, and they pay for this house, then they are the owner, but they have no ownership and therefore, of course, no deed.
Cool. And then the last one, and again, I'm hoping that maybe someone will give us a myth or an objection on the call here today that I haven't heard that will stump me, but I've yet to have someone give me a good reason why they can't consider a lease purchase. And the last one is, I'm not sure it's legal. We can just cover that one right now. It is absolutely legal. I mean, it's an arrangement between the landlord and the tenant. It's a contractual understanding. It's completely legal. There's nothing shady or questionable about it. We've done dozens and dozens and dozens, probably under 100, but enough that we have done this enough times all the way through that there's never been an issue. It's 100% legal. Now, there are some states in the United States that restrict lease purchase, Texas being one of them. Texas restricts the term that you can do a lease purchase under, or the minimum term, I think. I think it's like 3 years, but Georgia doesn't have any restrictions like that. As long as the agreement has certain elements in it, it's a valid lease and a valid purchase agreement. There's no question of legality.
Let me throw out, I agree with you. Because everything is in writing, which is key in a real estate transaction, any real estate transaction, it's all in writing, and you have, you go over the documents with the tenant, and we call them tenant buyers or tenants on training wheels, but you go over all the documents with them. Any questions? If they are uncomfortable, certainly they have the right. And at some point we actually ask them in writing, if you're not comfortable, then go and talk to an attorney. But it's pretty straightforward. And here in the Metro Atlanta area, it's more familiar to more people who are in a renting and thinking of purchasing. So it's not a new concept around here, fortunately. In some states, it's not as familiar, so there's a little bit more of a hesitation, or again, that question of is it legal or not will come up, but not here in the Metro Atlanta area, no.
Cool. So those are the myths that I've heard, that we've heard, and if you've got a new one or one that we haven't covered here, by all means, please save it for the Q&A because I'm going to want to hear it. Let's talk about the mechanics, step by step. Now, I will say up front that we're not going to cover in detail the paperwork that you'll use. If you want to talk paperwork, you're going to want to talk to a property manager that has experience in lease purchase, but all lease purchase transactions will have a similar flow, and it's pretty straightforward and looks kind of like this. There will be an event, we call it a signing ceremony, where the tenant will bring their earnest money, almost always in certified funds, as well as whatever else they'll need for the lease signing, first month's rent, security deposit, etc. But the thing that's different is that they'll bring their earnest money. So in the case of my example from before, they would bring a check for $5,000 in earnest money for the purchase and sale agreement, and then they will sign a purchase and sale agreement at the signing ceremony in addition to their lease agreement or their CYA, which stands for Cover Your Assets documents, lead paint disclosure, mold disclosures, all that other good stuff that you would have for a regular lease signing. But what is distinct is that they're going to sign a purchase and sale agreement that specifies a set purchase price, that specifies a date of closing, that makes it clear that the earnest money that is being transferred is not refundable if they don't qualify for mortgage, that if they don't buy on the date that it specifies, that they will forfeit that earnest money. I think that's it. Anything that I've missed in the signing ceremony section, Marta?
No, those are the key factors. Those are the main two documents, of course, are the rental lease agreement and the purchase and sale agreement. Those are the main two. Right. And yes, they bring their money. Sometimes they want to bring partial payments, but we can talk about that at some later point. And then you work out an arrangement with them. But yes, and then you've got your CYA kinds of documents to make sure that they understand what their rights are and what all of the specifics and taking care of properties, etc. So go ahead.
But at very worst, that'll be an overlay over your existing rental model. So the same documents that you would use for the purposes of closing any rental would be what your CYA documents would be. So it's not a dramatic shift from what you're currently doing. It just adds the element of earnest money and a purchase and sale agreement to an existing lease closing.
One other thing. Let me throw out one other thing.
Sure.
There are people out there, investors out there, that make the purchase portion of the transaction a part of the same document, that lease. Not a good idea. Not a good idea. You want to keep them completely separate. So I just want to throw that out there. If you're thinking of adding a clause or a paragraph to your lease, that's probably not the best answer. So I just wanted to throw that out there if you were considering that.
Good point. Good point. We are not going to, for example, discuss, because we haven't now, and I don't think we're going to have any time for it, and it's beyond the scope of this, nuances like rent credits, because that's a whole different can of worms. And I believe that you can achieve the benefits of lease purchase as a landlord without any rent credits. And so, for the purposes of what we're doing here, we're not going to go down that path. The next step is kind of this vague cloud-like thing called tenancy, where they're behaving like a regular tenant, although a slightly better tenant than a regular straight rental tenant. But they're paying the rent, they're living in the property, they're doing their thing over the course of a year, while they're presumably getting their finances in order so that they can purchase the house as they agreed to in that purchase and sale agreement. Not much to talk about there, except to say that, again, for the minor repairs, we're looking for them to address those things. Can't force them to, but again, these are the kind of people and this is the kind of arrangement that encourages people to want to do that. People that if you've got the right person, they're going to want to address those things because it's going to be their house as far as they're concerned. And then the last step is the actual closing. So at some point down the road, let's say a year from the signing ceremony, or a year and a day, they are now ready to buy. We're sitting in front of a closing attorney. We haul out that purchase and sale agreement that we had from that signing ceremony and show that to the closing attorney. We show that attorney proof of the earnest money that they paid, a copy of that certified funds check, and the standard lender closing documents. And magic happens. Presto changeo, underwriting does their job, and now that tenant buyer is now the owner of the property, and you walk away with the check for the proceeds.
Can I say a little bit about the tenancy, Mitch, here?
Absolutely.
Just to give you a little bit more information on that magic cloud called tenancy. We don't think of our tenants as tenants in the true sense. We think of them as future homeowners. We counsel them, we coach them as well. And we explain the importance of taking care of the house. We explain things that they're expected to do. We choose them because they have a history of taking care of their last place that they lived in. They have responsibilities like keeping the grass cut, cleaning the gutters, minor repairs up to a certain monetary level. If it's big stuff like the roof or the heating and air system, they call us, no question about it. But they kind of run the ship on their own. We are very aware that they are tenants, but we treat them like they are something more. We have higher expectations for them, and they generally, if we do our screening job right, they will usually make sure that they do all of the things that we ask of them, and they don't call us for little things. Like, I have conversations with our tenants, and I tell them, if your kid throws a rubber duck in the toilet, don't call me. And I said, you take care of it. That's your expense. Don't call me. If you need light bulbs or something minimal, don't call me. That's not something that I need to worry about. So just to give you an idea, they're tenants legally, but in reality, we treat them differently and we have different expectations, and they generally come through. That's all I have for now, Mitch.
That's a great point. And in fact, the tenancy cloud that I don't want to think about is your bread and butter. That's exactly what you do. And that's why folks like me don't have to think about that, because folks like you focus on making that part go as smoothly as it can so that you get to the step 3, which is the closing. So I'm glad you pointed that out. So at a high level, this is the mechanics of lease purchase. Let's talk about in my opinion, only legitimate reasons not to do a lease purchase. And I think there are only 3. The first one is, and I hear people say this all the time, I don't ever want to sell my property. Well, you never, ever, ever want to sell your property, even if you could get it at top dollar with tax advantages and paying half the normal commission, you still don't want to sell that property? Really? If you're an investor and I can't give you a price to buy your property, then I argue that you're not really an investor, because it shouldn't be personal, right? This is about business. And so if the numbers are better for you to do a lease purchase than do a straight rental, then I would think you'd at least consider lease purchase. And that's all I'm asking to do here. So if you're really one of those folks, if you do the numbers and the numbers say do lease purchase and you still don't want to do it, then I can't help you. But if you run the numbers, I think you'll find that in most cases, lease purchase is a far better solution to just renting, even if you had to, oh goodness, have to go sell. And in that vein, you can always go buy another property. If you tell me that you don't want to sell because you want to build a portfolio, well, if you can profit incredibly well from property A and then go off and buy another great property B and do it all over again, then why not do that? The only way that makes sense is if you run out of good things to buy and then rent, then maybe it wouldn't make sense to do a lease purchase. But again, I don't think that's ever the case in a decent market. I think there's always some place that you can find that's got great deals where you can lease purchase or at least get some cash flow. So you'll notice that these legitimate reasons are legitimate is in italics, because in my opinion, these aren't legitimate reasons not to do one. And then the last one, which I think is
Mitch, are you still there? We can't hear you. Well, while Mitch is working on those technical issues, hopefully you can hear me. Let's talk about number 3, which is the correct paperwork and systems in place. Certainly with the right paperwork, you're good. But if you don't have the right paperwork, you should be uncomfortable with the concept of lease purchase, because you don't want to have a tenant go to take you to court and you not have all your paperwork in order. You always have to realize that tenant is not your friend, and therefore this is a legal arrangement. This is something that will could or may take that next step. So what you don't want to do is to have not consider this very much a legal transaction. So keep all your you have to keep your systems in order, because you want to be considered fair as well. You don't want to be considered unfair in any way or discriminatory in any way. Everybody, you handle them the same way. And with the right paperwork, you will have covered yourself from an ethical standpoint and from a legal standpoint. Mitch, are you back yet?
I think
yes,
I'm back.
I hear you
back?
Now. Yes.
Okay. I don't know what I did, but I apologize for doing it, whatever that was. But thanks for picking up that, because that's a great point. But that's, again, I think that's your house. Is bullet 3, and paperwork and systems. And you touched on this before, and I think it's worth saying. The painful lesson that I learned over 20 years of doing lease purchase / lease option is that the screening is everything. Well, not everything, but it's a big part of this. If you put people who just say that they want lease purchase in, but aren't really lease purchase tenant buyers, you're going to get burned, and it's going to be painful. So the biggest mistakes we made were putting the wrong kind of people into the property, or trying to lease purchase a property that really shouldn't have been lease purchased. But I don't want to get too deep into that, except to say that someone who has in place already the paperwork and the systems, all the systems for screening and for managing and for handling the end of the process where you're converting into a sale, having someone with all that in place is going to be crucial. So I think that's enough said about that. So I'm going to, Marta, again, I'm going to defer to you on all this. I'm going to say very, very little, except to recommend that people pay attention to this part. But there are some costs and fees, but they are, in my opinion, not unreasonable. So you tell me when you need me to advance, and I'll do so.
Okay. There are property management fees that if you have a property that you ask a experienced real estate agent or real estate brokerage to do this for you, there are fees. You're going to pay, and why don't you go ahead with the next line item, Mitch? You're going to pay the first month's rent, which is pretty standard across the industry, as a commission or as a management fee in order to market your property, in order to screen your tenants thoroughly, and finding the right person for the right property on your behalf. The screening is so key, and we are very painful about it with our tenants, but we are very careful because of it. We also take a share of the earnest money deposit. Now, that earnest money deposit is also part of the overall earnest money deposit when the property gets sold, but it is a share of the earnest money deposit, is what most property managers will charge you. That earnest money kind of varies based on the agency or the property manager around the country that you may hire. Generally, it's a minimum of $3,000 to do this because it is more complicated and it is more involved than just a standard lease. Mitch, if you want to bring up the next item with the percentages, what we're doing is we're just giving you what we know in the industry across the country. We can't speak for everyone, but this is approximately what people are looking for, what agents or brokerages are looking for, and that's 25 to 45% of that earnest money deposit. It depends on that agent or brokerage of which way you want to go. But they've got some skin in the game because they want to be able to pick the right tenants, because if your objective is to truly lease purchase, they're going to try to get them to buy that house before or at the end of that lease period. If they don't buy, then they will have to do it again for you. But what they're looking to do is they've got an incentive here to help you get it sold. That's what they're trying to do. Do we have another bullet on that page, Mitch? I don't remember. Closing commission. Yes. Closing commissions are generally on a lease to purchase 3% of the purchase price. Because again, as Mitch mentioned earlier, you're not paying for both sides of a transaction, as we say. The general average here in Atlanta is about 6%. Some charge more. And what you want to do is understand that you're not paying both sides of it because you have a buyer. You've already paid a property manager for the buyer by sharing in that earnest money deposit. And you're not paying the full 6% because you don't have two sides of that transaction. You don't have another agent trying to help you to put a tenant in because you've already have the tenant from the property management company. So this is there are different scenarios you can follow. One is with a property management company doing this for you. Another is you manage the property yourself, and then you have an agent to help you with the buying and the selling part. it's really dependent on your specific situation and what you're looking for. But most of the owners that we help to manage their properties on a contractual basis, these are the kinds of numbers that we're talking about for them. So Mitch, did you want to add anything here?
I did. I want to make it crystal clear for folks that in the earnest money bullet, that minimum 3K is not a fee that the landlord's paying. This is the minimum that we're asking the tenant buyer to pay in earnest money. So the point being that if the property is, for example, you probably wouldn't want to lease purchase a $30,000 house in Metro Atlanta because the kind of person who's going to buy a $30,000 house is probably not looking to own it, even if they say they are. But if you had a $150,000 house, that's about the range. That's a good enough, again, in our market right now, that's a nice enough house in a nice enough neighborhood that you can probably get someone who's serious about lease purchasing that. And in that situation, the minimum earnest money that we would want that person to pay is $3,000. You could ask for less, but Marta's saying that you're going to want to ask for at least $3,000. And of that $3,000 that they pay, which is money that, just to be clear, you as a landlord wouldn't have gotten if you had just done a straight rental, right? You'd just gotten first month's rent, maybe first and last month's rent, but you'd get no additional money. That $3,000, if the split with the property manager, just to make the math easy for me, is 33%, then they're getting 1,000 of that 3,000. You're keeping 2,000 of that 3,000. So you're getting $2,000 that you didn't have to do anything to get for quote unquote nothing, for doing no effort, and for having a property manager. I will also say here, and we agree that we're not going to sell, and I'm not going to sell, but I am going to say that having done these myself for years, I don't ever intend to do one on my own again. I think one of the biggest regrets I have of my entire real estate investing career was doing the property management myself. So Marta won't say it because it'll sound self-serving coming from her, but I don't work for Marta, so I can say it. You and the overseas and international folks we've got and the out-of-state folks already know this. You're not going to be managing a property from California that's in Atlanta. So you know already that the way to go is to get a great property manager. That's why you're talking to us. But for those of you who are wondering if it's worth it to have a good property manager in place, absolutely. That's what's going to let you turbocharge your investment career. And specifically for lease purchase, you don't just want a property manager. You want a property manager who understands and already has done some of these. You don't want somebody experimenting on you. You don't want to be their test case for seeing how lease purchase works. You want somebody who's got deep knowledge. And I won't mention any names, but you want a company that's got deep knowledge. So do your own research, ask around, make sure that whoever you talk to does have experience with this, get referrals and testimonials and make sure that that's true. But by all means, don't even think about doing this on your own. Because even paying a portion of the commission, even doing all this stuff, you still make a ton of money more than you would as a straight rental. So hopefully I haven't embarrassed you too much, Marta, but it just needed to be said because I didn't want people walking away thinking that, wow, gosh, if you got to pay all this money, it's not worth it. It's still way worth it. And if you do the numbers, you'll see that it's still far preferred cash flow wise than doing a straight rental.
No, what can I say, Mitch?
And anybody,
the reality
is, me,
yeah. I think that the reality is something for you to consider because you are far away. Atlanta is a very hot market for investors right now because the prices are generally better. Quite frankly, the tenant population is booming. You've got cases, again and again where properties have so many potential tenants, you cannot even address all of them because they are just all over the advertisements for a property because they need a place to live. It could be something that it's only going to last for a year. We've got industries here that are getting stronger and stronger. One of them that has been happening for, it's getting stronger and stronger is the movie industry. movies and television shows. That's big business down here now. So you've got so many areas that need people, need places for people who are going to live here for a year or two, and then they're moving on. So, the point is, this is a pretty hot market here in Atlanta, and we're very fortunate to be here. And it's just something to consider. If you want to, if you have some place to put your investment dollars, this could be the place for you. So I'm done, Mitch.
All right. So now we come to the, if I can do it, the Q&A. I do have one question that I have here that I will answer if we don't have any pressing questions. But let me pause and ask anyone who has a question to please use the Q&A capability or the chat capability to submit your question, and we'll certainly answer them. And while we're waiting for those to come in, I will address one that I alluded to a few minutes ago, well, a little while ago, and just kind of briefly address it here. And that is, someone raised their hand. Okay, so let me see what we got here. So if you have a question, go ahead and type it into the chat. And let me take a quick minute. The question is around rent credits. And I'll just briefly cover our take on that. And Marta, you can jump in if you want to.
Sure.
Pre-Dodd-Frank, and Dodd-Frank is the legislation that was passed after the major real estate meltdown to, in theory at least, create another situation from happening. Many of us in the industry think that they fixed the wrong problems, but one of the results of that legislation is that it makes it much more difficult and much more, there's a lot more paperwork involved in arrangements, in financing arrangements with owner occupants. And so if you offer rent credits, and rent credits are simply a portion of the rent payment. So in the case that I've been using so far, of that $1,750 in lease purchase rent that they're paying, some portion of that would go toward the purchase of the house. So let's say every month they pay $1,750 on time, $100 of that goes toward the purchase of the house. So if they pay it every month on time at the end of the year, they'd have $1,200 in addition to whatever they put down. They'd have $1,200 toward the purchase of the house. With the advent of Dodd-Frank, it becomes murky as to whether those rent credits constitute a financing arrangement. I've heard some attorneys say yes, some attorneys say no. And in the interest of safety, as of Dodd-Frank, we stopped offering rent credits. And what we discovered is that while rent credits were nice, they weren't the primary motivator for people doing lease purchase. They helped a lot of folks to want to do it, but even without rent credits, we still had tons of people beating down our door when we had lease purchases available. So as a result, we've kind of gotten to the point now where we're spoiled. We don't offer any rent credits. Obviously, all the earnest money that you pay will be credited for the purchase of the property, but you get no additional credits just for paying your rent on time. That's what you're supposed to do. And so what we have done in the past is at the time of closing, we can choose on our own to contribute something toward the closing costs of the tenant buyer. But we do that kind of out of the goodness of our heart as opposed to putting it down on paper so that we have a happy client, but we don't have a situation where they can hold a piece of paper up in front of a court and say, hey, they promised to do this, and therefore it's financing, and therefore we get in trouble. So we can be good guys without having to worry about having our goodness be held against us. So that's why we no longer offer rent credits on our lease purchases. Marta, you want to jump in on that one?
Sure. Back when we first got to the Atlanta area back around 2004, we offered rent credits, but we found that it didn't make a difference. It didn't motivate a tenant buyer to buy any sooner, and didn't help to take care of the property, nothing. So we stopped doing it over 10 years ago. Sometimes we have tenant buyers who ask us, do we provide them? And we say no. Dodd-Frank was not our motivator. That is, of course, a motivator because you want to keep it legal and no questions to be asked. But it doesn't seem to make a difference. Some people think it does, but it really, in reality, it doesn't, as far as we're concerned. So we don't offer them, and it has not been a problem, for us.
Cool. And I think that generally speaking, if you one of the benefits, of course, of doing your lease purchase through a knowledgeable and informed entity, namely a property manager, is that you don't have to keep up with all the compliance issues. That's something that you can pass on to your property manager. They're the ones that are responsible for all that stuff. So that if anything did change, they could be aware of it, and then you could reap the benefits of it without having to become an expert in that particular field. And you can focus on what you should be doing, which is finding other great properties to add to your portfolio. So I will, it looks like we don't have, at least unless I'm looking in the wrong place, I don't see any additional questions here. I know someone tried to raise, oh wait, I have a question. Will be a replay. We are going to try our best to make a replay available. We have the email addresses for all the folks that are on the, that were invited to the webinar. So we will do our best to try to get that out sometime soon. So the answer to that is yes, there will be a replay made available. I can't tell you how soon it'll be, but within reason, and we'll let everybody that's on the call know. I know we're running a little bit behind, and I'm sure that's my fault, but let me get to the very last slide, which refers to next steps. And I will at least identify these, and then we can talk about them. MARTA has graciously agreed to provide for free, in line with our commitment not to sell anything on this call, a lease purchase frequently asked questions document that will cover a lot of the stuff that we talked about here and some other things as well. And then if you want that free lease purchase FAQ, you can email her to the address that's on your screen, lpfaq@bluepeachrealty.com. LP, of course, lease purchase, frequently asked questions. LPFAQ, it probably will work whether it's uppercase or lowercase, but either way, at bluepeachrealty.com, and she'll send you that frequently asked questions document, which you're going to want because it's going to cover a real world perspective on lease purchase, not something that we got out of the book. All our lessons about lease purchase we learned the hard way. Any comments you want to make on that FAQ, Marta?
No, I'll be happy to send it out, and it will be questions that a lot of the questions that we normally get. If you have additional questions that are not covered in there, I'll make sure that we have our contact information and you can give me a call, and I'd be happy to answer any questions that you may have about it.
Cool. For my part, I don't have a fixed product, but I will say that, as you can probably guess, I love talking about lease purchase. I think it's an excellent strategy where it makes sense. And if you have a property that you're thinking about going the lease purchase route with, and you want to chat with a fellow investor about the analysis of it, shoot me an email at analysis@home-pride.com, and we'll set up a time to chat on it. And in terms of compensation, I may make you buy me a cup of coffee at Starbucks, or depending on how much time you need, maybe something else. But at very least, don't not do that because you don't want to have the conversation. Because I think that for most of you out there, the rentals that you have could be vastly improved from a cash flow standpoint by at least having some of them be lease purchase. Last two bullets, just briefly, wanted to get your feedback. We started this series intending it to be for out-of-state and international investors whose needs are, in all cases, a little different than they are for the folks that are here local. If you want more webinars like this that cover a variety of topics, we're thinking about doing one on short-term rentals because we're both intrigued by that revenue model. We're also trying to get smarter on opportunity zones here in Atlanta. But if you want more like this, email to webinars@home-pride.com and let us know what topics you want to see us cover, and we'll do our best to try to cover those. And then lastly, if you can please give us some feedback on the usefulness of this particular webinar. Did we cover it in enough detail for it to be useful to you? I'm not sure if the lack of questions is because everybody's busy running their calculators to see how they can start doing lease purchase, or if we stunned everybody into silence. But if you can give us some feedback, either way, we can take it. We'd appreciate that. Otherwise, I want to thank you all for being here. It is an honor for us to be able to come onto your computer or onto your phone at 10 o'clock here, which I know is in some cases some really crazy times around the country and around the world. So thank you for being here, taking the time to hear us talk about this. Marta, any last comments that you want to throw out there?
No, I'm just delighted that there are people out there who want to learn about the lease purchase concept, and I want to hear it from people who have done it before. And, if we can in any way help you, that's what we'd like to do. So that's all that I had, Mitch.
I think the reason why we did this, I think people are still probably wondering, well, what's in it for you? I'll be blunt. The reason why I want people to get lease purchase is because the next time I talk to someone about a deal that I've got and I say lease purchase, I don't have to see their eyes glaze over. They can go, oh yeah, I understand exactly how that works. Let me run the numbers and see how that might benefit me. And the more people know about lease purchase, the easier it is for me to have that conversation. But I'm going to do lease purchase, whether anyone else does or not. And the few of you who do it, it won't impact me either way. But I think if you start down this path, you'll look back and go, why on earth did I ever rent for all those years when I could have made way more money doing lease purchase and have a lot less effort involved? With that, I will thank you all for being on our little webinar today. And we hope to hear from you all with some feedback. And we will be doing this again sometime soon. Thank you all very much.